Hi there, Serial Trader here. Let's have a look at the major U.S. indices and heading into next week, what we should maybe be looking for. And I'm going to start off with a chart of SPX, but this is actually an inverted chart. So we're looking at things upside down. And I want to just do a little mental exercise here. So let's pretend this was actually the way the chart looked. You'd be looking at it and you'd be thinking, oh wow, oh, well, we had this, steady downtrend, lower lows, lower highs. We came to a point here, and now we've had a nice explosion off of there, breaking multiple, prior resistance levels. And more importantly, we've done, 1, 2, 3, 4, 5 up very convincingly to the upside, maybe for a larger wave one. And now we've come down for a, corrective retracement. We've done an ABC down so far, right at that 618 Fibonacci level, overall retracement of this, first wave up. That could be our wave two in place, and now maybe we're steering, wave three to the upside, dead ahead. And if I did that, I think a lot of people would be inclined to agree with the wave count and the bullish outlook because it feels good. People tend to have a bullish bias, especially on something like the indexes. So I wouldn't get much pushback. And also it looks quite good from an Elliott wave perspective and everything, the structure's there. So it'd be, fairly easy to get a good reception for something like that. Interestingly enough, and this is the exact same chart, but when we actually look at reality, and this is the reality of the chart, we have 1, 2, 3, 4, 5 waves down. We look like we have our ABC up, possibly for wave two. Although I'll get to some other possibilities in a moment. And now possibly getting ready to break down another leg down soon. And it looks like so far we've at least started coming down off of the Fibonacci touch there on the 618, which is quite nice to see. Good reaction off that level. So if this chart, or if this Elliott wave count or outlook is harder to accept than this one, that means you have a bullish bias. That's incorrect. There should be no bias when you do analysis. It shouldn't matter whether the pattern is pointing down or whether the pattern is pointing up. You should strive to have the same objective, wave analysis you do in either direction. So if one chart is easier to accept than another, that's a sign you need to adjust yourself there and try and remove that bias. Now that being said, since the last video, I believe we were here, and that was on Wednesday, and we made a high at 28.15.15 on SPX, just slightly above the 618 retracement of this overall decline, which was at 28.12.03, so roughly 3 points above the 618, which is nothing. The very next day, we did a doji. I don't have the candlestick chart up here, but it is a doji. We'll look at it on the other one later. And we actually went as high as 28.14.75, so failed to even get above the high of the previous day. Had a reasonably large intraday range, but was very much indecisive day. Just the characteristics of a doji star. Closed very, very close to where we opened, despite the high and low there. And then the very next day on Friday, you can't see it that well here, but there was a slight gap down. I believe there's a gap. So the low of the previous day, 27.94.99. The high of this one, 27.94.10. So a tiny little gap there, if you look carefully. So we gapped down, traded quite negatively at one point throughout the day. Had a partial recovery into the close, but still a negative day. So if this would almost be too perfect, but if we do just have a straight up, one down, two up, right off the 618, we might just be ready to fall apart here quickly. And that's certainly possible. In fact, it even looks somewhat likely at this point. But there's also other potential scenarios we need to entertain. So I like that this is an ABC up. And if we just go maybe the hourly chart, yeah. This looks like a nice ABC up, three-wave corrective, advance, so a 5-3-5. Now that could be for all of wave two, so ABC up for wave two, or we could be, now, so I'll go with the daily just momentarily before we come back down here. This overall decline from top to bottom took over a month, okay? So we go from the 21st of September, the all-time high, to our most recent low at the 29th of October. So, roughly a month and a week, something like that. Now, this corrective bounce, it fulfilled the price objective quite nicely, hit our 618 target, and also just below the previous fourth wave of 1 degree, which came in at 2016.94. Notice we didn't actually get there or above there. The high was 28.15.15. So stiff resistance right there. You have that 618 and you have the previous resistance. So that was a nice level to stop at, and we stopped there. I'm just concerned that we didn't correct enough time in proportion to the amount of time consumed on our way down. Now, it doesn't mean we have to have a proportional time correction. We could certainly just have a brief, sharp wave 2 and come down quickly. But being that we went from the 29th of October to our high at the 7th of November, that's a quarter or less the amount of time roughly that we took to go down. So what may actually be happening, and this is just me speculating here because I like to think of all the potential scenarios, maybe we did ABC up for a wave W. We'll come down in a wave X and have one more leg up, maybe to a marginal new high in wave Y. So do a WXY double zigzag, maybe put a little more pressure on the 786 retracement when we come up in wave Y, right? That's possible. So we have a 535 up for wave W, so zigzag for wave W. We'll have some sort of, partial retracement of this overall wave W in wave X, maybe come down and close some of those gaps. And then go up one more time in wave Y, and then be looking to come down in a stronger wave down, right? Now, that's just something I'm watching. It's really going to matter, how we come down here, and do we just fill the gaps and find some support, start coming up again, or do we just really start breaking down and coming down, convincingly and quickly take out our low here? Obviously, true confirmation will be taking out the low at 2603.54. That should lead to significantly lower prices if and when we get there. But I just thought I'd present those scenarios. There's also the even less likely scenario, and we'll go back to the hourly chart here. The even less likely scenario that we just have a minor little setback here, and we're still subdividing higher just in our current retracement upwards. That's also possible. But I think that's of the three scenarios I'm looking at, that seems to be my least likely. I think, just going by probabilities, it's probably the most likely. We just have our wave 2 and we're just going to come down swiftly in wave 3. Second most likely, we do our WXY. So we're still looking to come down here in X, but not to a new low, and then we come up and put some pressure maybe on the 786 retracement and wave Y. That's my second most likely scenario I'm thinking of. And then, the least likely of the ones I'm currently entertaining would be just a very minor setback here and continuation of the upside, shortly. So that's kind of where I'm at there. And that being said, I think I've kind of laid out what I'm seeing with the wave patterns. So let's go to the Thinkorswim candlestick chart. And anything here? So on our oscillator, we got nicely into the overbought territory, and it appears to have stalled, maybe ready to start curling down here soon. Obviously, on the 618 retracement, stiff resistance, as well as with the previous fourth wave 1 degree. See that nice doji star we did on Thursday. So that doji star in the overbought condition, that's either a pause or a reversal pattern. Depends how it opens the next day typically. Well, we open lower. In fact, we slightly gap down, and then negative trading followed. So I'm liking that we have that doji star reversal and then followed up with negative trading on Friday. That certainly tilts the odds towards, we've got our pivot and now we're looking to go lower here. And, a good sign would be getting below the T line here, and also this 200-day simple moving average. Getting back below that would be a good sign of further weakness to come. And we have not yet closed the gap between these two candlesticks. So I believe that was between Tuesday and Wednesday's trading of last week. That's where that gap came from. And then, you know, the first gap is quite a bit lower to close down here. Now that's what we're seeing here on SPX on the daily candles. Certainly complementing the outlook from the Elliott wave patterns. So, you know, looking for more downside. Let's look at the weekly chart, candlestick chart, SPX. And what do we have here? So I like this. So just like the daily T line provides kind of a natural support and resistance level, depending whether you're trending up or trending down, the weekly T line can also be applied this way. And as you can see, since we broke down, the weekly T line has been providing good resistance. And actually last week, despite you know, intra-week we got above the T line, look at where we closed. We just closed just at or below the weekly T line. So I like that. If the weekly T line continues to serve as resistance, then obviously we're in a pretty strong downtrend. So we'll continue to monitor that. I won't go to the monthly chart because nothing's changed since last month's candlestick. We're still in the current month, so there's nothing to analyze there yet. All right, that's good for SPX. And oh, also, yeah, just a little comment on the puts that were opened by me last week. Basically opened them right near the top here. Those SPY 290 strike December puts, and they're doing nicely so far. And I may be looking to add to them here if I can just see a little more confirmation, maybe get below the T line, right? But so far, it looks like the bearish positions, you know, got in at a good spot here, right off that reaction to the 618 fib retracement. I'm really liking that. Okay, now we'll go to the Dow Jones Industrial Average. Okay, and what are we looking at here on the Dow? Okay, so the Dow did a deeper retracement. It got closer to the 786 retracement, although not quite there, so in between the 786 and the 618. The Dow now in the overbought condition on the oscillator here on the daily chart. So I still like that we have 5 down in the Dow, and now we have a sharp wave 2 up, a deeper one, but still certainly acceptable. And the Dow, you know, also had negative trading on Friday after doing its own kind of doji indecision day on Thursday. Slightly different, you know, pattern than what SPX was showing, but very much, you know, directionally in line with it. Okay, anything on the weekly for the Dow here? Have a look. So the Dow a little stronger looking on the weekly, got back above the T line and closed above the T line on the weekly. But the Dow is a less diversified index, so there's only 30 constituents, whereas the S&P 500 has 500 constituents. So I put a little bit less weight into, you know, what the Dow is doing, as it can be distorted more easily by you know, a few large names or whatever, right? The S&P is a little less susceptible to being, you know, overly influenced by a large individual company, although there is still some element of that, just not as much. All right, so that's the Dow on the weekly. So looking a little different, but still expecting further downside on the Dow here if we have a nice pivot. I just don't see a scenario where the S&P would be coming down hard and the Dow wouldn't. That doesn't seem likely at all. All right, won't look at the Dow monthly either because nothing's changed since we checked out the last monthly candlestick. All right, now the NASDAQ composite. What do we have here? All right, NASDAQ composite. This one is actually showing the most relative weakness, and that's indicative of tech being the lead bear to the downside. So we didn't get anywhere near the, let's delete that there, didn't get anywhere near the 618 retracement, which would have been that previous fourth wave of 1 lesser degree here on the NASDAQ composite. We actually just got slightly above the 50% retracement on Wednesday. Thursday we did a doji, and then pretty nice gap down there between Thursday and Friday on the NASDAQ, and was looking quite bearish at one point, but still, despite recovering some towards the end of the day, it's still a gap down and a close below the daily T line. So that's looking fairly weak on the NASDAQ. And we're also in the overbought condition on the daily oscillator here as well. And we also basically failed once again at the 200-day simple moving average. So the 200 serving as some resistance on the NASDAQ. So yeah, looking right for more downside. Let's see if we have anything on the weekly for the NASDAQ. And yeah, we do. So on the weekly, definitely the weekly T-line is providing some good resistance for the NASDAQ. You see we just slightly got above it there intra-week last week there, but closed well below the weekly T-line. And basically just this very long upper shadow rejecting those higher prices. So I'm liking the NASDAQ here as kind of the lead downside mover. The tech sector is definitely vulnerable here. All right, so that's probably good for the NASDAQ. Don't need to do the monthly because nothing's changed yet from that month we looked at last time. Okay, go to the VIX. And what do we have for the VIX? So the VIX, oh, interesting. So the VIX looks like it had a nice pivot off of its 200-day simple moving average. And its 50-day is crossing above the 200-day. So you got a golden cross on the VIX for whatever that's worth. And still nothing substantially picking up here in the VIX just yet. Although it's got to start somewhere, right? So maybe that pivot off the 200 was the beginning of another VIX uptrend. We'll see. All right, that's probably good for that. Now, what should we be looking at here? Oh, just before I end this one, we'll go back to the wave chart on SPX. So, okay, if we have our 5 down, 3 up, we got our 1, 2, and now we're going to be looking for our 3 in progress. Well, where should we be looking for downside targets if we now have our levels to work from here? Well, let's do this. So we'll do a relationship between wave 1 and the potential wave 3. And let's see, we got equality and the 1618. I'll just show those two for now. So if we do the equality relationship, which would, if we only got there, it would be more likely that we're just doing a C wave down and we have an ABC down. Equality would get us to 2477, so that'd be well below the February low there, which was at, let's see here, 2532.69. So even just the equality relationship in an ABC would still get us below February's lows. And then if we go down harder in a more clear third wave, the 1618 relationship would be a good one to look for between 1 and 3, and that would get us down to 2269.29, so below 2300. So those are some interesting levels to be looking at, but don't get too far ahead of ourselves. We need to start breaking down more convincingly here from our pivot, and then we can start looking at that a little more once we have more confidence. But I just thought looking ahead would be interesting just to have an idea of where we might be going in another leg down here. All right. Yeah, that's probably good for now. We'll check in next week sometime. Serial Trader signing off.